What's going on, guys? It's Mr. Banks, and today we'll be showing you how to create a trade plan on your own so that you can start creating trade plans. And this is the strategy that I used to turn from unprofitable to becoming a profitable trader, and what I use on a daily basis to create trade plans for me and my team. To start off, guys, we need to be looking at a top-down approach. What do I mean by a top-down approach? I mean looking at the higher timeframes, daily, 4-hour, 1-hour. On these timeframes, you'll be finding the major levels of support and resistance. You'll also be finding and charting the major zones of supply and demand. We chart these levels and zones because it's going to show us the highest probable trade. As we know in trading, nothing is for certain, but we can do things to give us the highest probable outcome and therefore give us the highest probable to be making money day trading or just trading in general. So what is support and resistance? Well, support is going to be where sellers, bring the market down. It's going to find support where the buyers are at. Same thing as you use in any kind of economics. Same with resistance. Buyers will be bringing us back up. Resistance is where buyers are met with the sellers. At that point, it becomes a resistance because buyers cannot break out because they're met with sellers. Sellers met with buyers, support. Buyers met with sellers, resistance. Now, what are supply and demand zones? I have some other videos on this. I would definitely go check it out in the library. But very quickly, supply equals sellers, demand equals buyers. Supply equals sellers, and demand equals buyers. So now that we know that, I'm taking a trade today. What we took was Microsoft puts, and we got over 100% on this trade. Now, I created the trade plan before the market. We got it. And this is exactly what I did. So let me pull this up a little bit for you guys. So when we're looking at support resistance, I've already mapped out some major support and resistance levels for you. And I've also mapped out supply and demand. So as you guys can see here, big supplies where a lot of sellers were left. Huge move to the downside. Demand, this is where we held. Huge move to now the upside, back into the supply. So now I've drawn out my supply and demand videos. And again, I won't be making another video, or you can check out my old videos on supply and demand where we go very in depth on this subject. From there, I've pointed out and charted my major support and my major resistance levels within the daily time frame. Now, again, I also have a 4-hour and a 1-hour to give me a little bit better perspective, but really all we need is going to be the daily time frame, especially when we're first starting out. So why is supply and why is demand and why is support and why is resistance very important? Well, we have to know where the sellers are and we have to know where the buyers are. When we're looking at the market is made up of two things, buyers and sellers. So if we know the market is made up of just buyers and sellers, we form a high probability trade plan around that because we know if we're getting into a zone of sellers where we know there's heavy supply and we're retesting it, the highest probability is that we will see sellers again and we will have a big reject there. Likewise, if we pull back down into a demand, we already know that there are heavy buyers here that took us higher. So we're coming back to retesting that big demand, especially on a higher time frame like the daily chart. Then the highest probability is that buyers will act as buyers and they will defend that demand zone, just as sellers will act as sellers and they will defend this supply zone. So using these metrics, we can show what is going to be the highest probability trade. If we know we're entering into a zone of high sellers, the highest probability trade with confirmations I am about to show you is going to be a reject, which and therefore would be taking puts or to be going short. If we're coming back into a demand using these metrics, we know that the highest probability should be buyers stepping up. And if the buyers are stepping up, we can look for a bounce and to get long. So that is why we are using supply and demand, why we are using support and resistance, because the market is just buyers and sellers. That's all it is. Do not try to overcomplicate this. It is buyers and it is sellers. From here, we are going to be using how to take an entry and exit. So now that we have our supply, we have our demand, we're looking, okay, let's look for a reject into the supply first, right? We know there's heavy sellers here. It's what took us down to lows. So now on this retest, let's look for a day trade to get short. And again, we saw over 100% here today with the team. Let me grab some EMAs to know, because you'll be using EMAs now for this easy setup that I'm showing you guys. EMAs to know the 8 or the 9, the 13 and the 48, and you can even add the 21 if you like. So for those that know the 8/9/21 cross, I personally like to use the 1348 cross. It's going to be essentially the same thing. Please use whatever EMAs you like. Same concept. I just personally like the 13 and the 48. And as far as the 8 and the 9, those are interchangeable. You're not going to see much difference. So if you like the number 8, use the number 8. If you like the number 9, use the number 9. 21 is an extra added confluence, but I'm going to leave it out here for this video. So let's go down to the smaller time frames and let's add into our EMAs. So let's add our 48. Let's add our 13. And let's add 8, 13, 48. I'll just go ahead. We'll leave it at that. We'll leave the 21 alone for now. Another indicator you could use is going to be the 200 as well, but we will leave that for another video. Great. Now we are on the smaller time frames. So let's go back to the daily here. 5 and 10 minute are typically best to take a entry and exit off of. Let me explain further. Why do we do that? Well, we already have our big levels. We already have our trade plan, our highest probability. We're looking for a reject where the sellers are at. So from there, we can now look for a reject within that supply. From here, I'm on a 10-minute time frame, and you can see we had a nice solid reject right here into that supply. So if we look right here, that 461.60, 461.60, you guys can see here on the supply. Let's go down to the 10-minute. This is going to be the same portion. So let me go ahead and highlight this for you guys, just so you can see that that is the same level that we are using. So same supply as that daily. Here's it highlighted for you on the smaller time frame. We are looking for a reject within this supply. So we have our levels, we have our supply zones, we have our resistance. Great. We have everything setting up. Now we're going down to the 10-minute time frame to take an entry. So what are we waiting for? We're looking for a false breakout, a solid reject, something that's showing us, okay, sellers are now present and we're going to head lower, and it is okay to take an entry here on the smaller time frame. So where would I be taking an entry? Let's go down to the 5-minute. 5-minute time frame is very good because it's going to give you a little bit more candles within the first 30 minutes or hour. It's going to help you understand what exactly is going on and breaking it down a little bit better. So what are we looking for? Well, we're looking for a smaller EMA, 8 or the 9, crossing a higher EMA, the 13, as well as the 13 crossing the 48. So we have right here the 8 crossing the 13. Ideally, we want to see more so the 13 cross the 48. But for this instance, we already know this is a major supply to the upside. We already know that this is where sellers are present. So we can use the 8 crossing the 13 as an entry. To add an extra confluence here is the pre-market high, pre-market low. We have the pre-market high here. So what are we seeing here? We're seeing a big reject into supply where sellers are present. We're seeing a big reject into pre-market high. And now we're also seeing the lower EMA cross the higher EMA, in this instance, 13 EMA. Another thing we can get into, which is going to be patterns, is going to be the evening star here. So let's go ahead and take a look. As you guys can see here, to add just some extra confluence, not really want to go too crazy here on the patterns, but we also had an evening star, which is going to be a bearish reversal within that supply zone. So what am I doing here? I'm adding a bunch of confluences together so that way I can also add to my high probability. If we're having everything add up to sellers are present, reversals from the reversal pattern to the false breakout, to the move lower, to the EMA cross, we have so many confluences now. It's giving us a super high probability trade that we should be going short. So let's get back to the charts here. If you'd like to have a pattern video, go ahead and drop it in the comments, and I'll be going over the top bullish and bearish patterns for you guys. Great, so now we have the EMA cross. Where do I take an entry? Do I take it up here? Your experience and you start to see this pattern, you can. But where I would highly suggest for most of you is look for something like this. We know that this level, again, this is going to be that level in our supply, 461.60. Let's go back down to the 5-minute time frame. 461.60. What is happening here? Well, we had a reject at pre-market high. We are having a reversal pattern. We're breaking back below. What are we going to now add for a great entry? The last confluence besides the EMA cross is now a retest into the beginning of our supply zone. Also, a heavy resistance level that we found. So waiting for this confirmation of the cross, and we're also going to get that reject within right into that 8 EMA and 13 EMA, also into our big resistance level here. This is where a great entry would be had. Perfect. Now we are in our entry. Where do we go from here? How do I know where to take my exit? Well, when we're trading options, we have to always be selling into strength. So as we sell into strength, every single move, we're selling, selling, selling. But how do I hold my winners longer? How do I hold my runners longer as well? Will we also be using these EMAs? So as I said earlier, that 13 crossing the 48 here, we have that cross, we have that reject. So we are now moving lower. We know that we already had the smaller EMA, the 8 cross the 13 EMA up here. We got our confirmation on this back test and reject into our supply and big resistance level. We take our entry. Now we can ride this down. We're having an extra confirmation here once that 13 crosses that 48. And after that, we're seeing a solid trend, right? We're seeing a nice solid bearish trend. We have our EMA crosses. We've had our sell and supply. Now we are going to just be looking at the 8 EMA. So the 8 EMA, and again, you can use the 9 EMA if you like, is going to be our trend indicator, right? It's going to be our trend indicator. So we can use this 13 EMA as a last line in defense, or we can use a couple different time frames. So we're in the entry, we're riding. What do I look for in order to take my final exit? Well, we're looking for this cross, right? Now we're seeing that 8 EMA cross the 13 EMA, right? The lower is crossing the higher now up, creating a bullish signal. But what else are we seeing? We're seeing that we are breaking out of this trend and we're getting a full body candle close above the 8 EMA. So if we're using the 8 EMA as our trend indicator, we're heading lower. We have our 13 EMA as the last line of defense. Once we see this cross, right? We had that cross down, bearish indicator. We have now our cross up. We're having a full body candle close to the upside. Great. Now I can fully exit my last runner because it is now showing that we are starting to break trend, right? We are starting to break trend. And why I say the 5, 10, 15 minute is because while we'll use that 13 EMA as the last line of defense, you could see here on the 10-minute chart that we are having some solid trend down. We don't really need to use this 13 EMA until the 10-minute breaks. So if we look on the 5-minute chart here, we can see some possible breaks. Today it was pretty clean, but you'll see sometimes the 5-minute where we have a full body candle close above, say right here, but we still head lower. The higher time frame, like the 10-minute or the 15-minute, will keep you in that trend on the 8 EMA longer. So this is how you form a trade plan. This is how you take the entries. This is how you take the exits. If you guys have any questions, please drop a like or comment. Please share this video. Thank you guys for tuning in. As always, believe in God, and I will leave this. Believe in yourself. You guys can do it. I love you. You can make it. Let's have a great week in trading.